When you think about periods where people have anxiety or sensationalized headlines, that's when people have low intent or even no intent, right? That's the push and pull to what we do in marketing, the offensive and defensive. We started at the cusp of the circuit breaker. Immediately, people would basically lose access to their financial advisors. They can't go into bank branches. The physicality of having someone next to you, was removed. And that's when we stepped up and we said, hey, we can do this at scale, right? Content marketing and SEO and GEO is the part that drives that engine. So when markets are rosy and people are ready to put their money in, we do a lot of paid and then we acquire on a broader scale. When people are apprehensive, we educate them on the need to be consistent with your investing.
Hello and welcome to the CMO Office Podcast. My name is Nikki Taylor, the APAC Marketing and Communications Director for Analytic Partners and your host today. I'm joined today by Jason, the Chief Marketing Officer at Endowus, one of Asia's fastest growing digital wealth platforms. Jason has been with the company since it launched and he has helped scale the brand through 6 years of rapid expansion, changing market conditions, and most recently the shift from growth at all costs to profitability. Welcome, Jason.
Thanks for having me, Nikki.
So the shift towards profitability, how has that changed the way that you are thinking about your marketing investments and accountability? Because as we talked before we jumped onto this podcast, we talked about that you were acquisition at all cost, and now it's sort of shifting into growing customer base.
I think in the transition to being a profitable business is understanding the levers to help us get there faster, right? And in where we are in trying to build the business is really for long-term sustainable growth, and specifically looking at marketing as a vertical to curb or to influence profitability would probably not be the right step forward.
So you're looking at marketing to influence the growth. So as you've got brand on one side, performance on the other, what have you doubled down on and what have you deprioritized in general across the platform? Or you can be specific on a specific product over the 6 years and why?
I think there's one thing that we have done very consistently, and I wouldn't say doubled down on, is to be really the first and foremost a platform that people feel that they can trust.
Okay.
So a lot of what we do from a branding perspective and what has done really well for us are our client advocate series.
Okay.
So we do a lot of testimonials. We do a lot of interviewing of existing clients, getting their point of view on what makes them tick. How have they considered investing? For their personal good, for their the wealth or for inheritance. And how has their experience been with platforms like ours? In comparison, sometimes in what they have used before. So the testimonial type of marketing has done extremely well for us. And I think that's something that if you have followed our brand story, you would have seen have come up more than once, and that has, I want to say, has performed extremely well for us also from a unit economics standpoint. So in terms of just building trust overall and building meaningfulness to an individual, we try and select profiles that attend to the broader demographic, right? We look at retirees or retirees to be, what they think could be an issue for them when they think about retirement. We look at first jobbers. We look at moms and we try and help the audience understand, what are some of that insecurities that comes to mind when they think about investing.
Okay.
Yeah.
Nice. And that's where the series gone there. Awesome. Well, I'm going to change things up a little bit. I'm going to talk about a little bit more about measurement here because that's what I like to talk about. But you said after 6 years, you now have a very clear sense of what a good cost of acquiring a customer looks like. Now, I know there's a lot of marketers that would say that's what they aim to do, but they don't necessarily get there. So quite happy to have a very long answer here because I'm sure the marketers would like to know step by step, how did you build this out? And why are you so confident now after 6 years that you have a good understanding of what that is?
Yeah, I think that's a really good question. And It's actually also based on the product or service that you are engaged in. And in our business, it's a service, right? Essentially, it's also a very high touch, high risk, and emotional service that is offered to
It is.
the end user.
Yep.
So interestingly, when you think about the cost of acquiring such a user, you assume that to be seemingly high, right? Because people are emotional about money. They are, careful about how they spend, their dollars,
Yep,
and
yep.
no matter how much they make, right? And in that, when we think about trying to drive or look at a good baseline, right? It's also on the back of the 6 years of history since we've launched, right? The first formative years are the ones that was a little bit about trialing, right? About understanding the type of messages that work, the type of channels that are targeting the right segment. And obviously all this marketing mix and the investments that come in and the resultant unit economics that we see paint a picture of what we deem are the right economics for the business. And I think the last part that's unique to our business is because it's in the business of investing. The markets play a big part. Sentiments, sensationalized headlines actually change the way people think about money.
That's interesting.
Yeah, so if you think about what's happening today in the world, you think about taco, you think about the different voices that have very strong opinions on Twitter or X, what you call now. They influence sentiments, and they can be quite influential in the sense where people actually stop and think, hey, I don't have to invest today.
Yeah,
Right?
that is super, super interesting that you mentioned that. I think, like you said, sensational news actually, has an effect on people, whether they want to invest now or not. I love that when you've crafted and explained how you've come up with your ideal customer and how you understand it so clearly, is that there was a lot of testing and modeling and the ability to step back and understand it was going to take time to build. And I think that's one thing marketers need to remind themselves, that not everything can go at speed and some things do take time. Some things do take trial and error as well. So I think that's another great reason of why 6 years on, you're very confident of being able to say, well, now I can. If you asked me in year one, probably still testing, whereas now you said, well, I've gone through the steps and that's what it is, which is really, really great. All right. So from there, now I want to know, we talked about CAC a lot, and I want to know, how do you use CAC baseline when you're discussing the budgets with your team and also with the leadership? And does it change the nature of those conversations, and why so?
Well, I think, again, with the number of years we've been around, the CAC baseline, or at least the target CAC that we always try and arrive at for a full year, answers to the number of clients that we can acquire.
Yes.
Right, and then above that is the amount that we can spend. Right, so essentially, if we think about that from a very formulaic example, we really know, again, with experience, the marketing activities, when should we invest from a tactical, from a seasonal perspective. And again, investing is a bit about influencing the right behavior. And there's a macro environment that affects investing. There's also a micro environment, specific for Singapore, for instance. The supplementary retirement scheme. Singaporean investors are typically very last minute in nature. So, they tend to wait towards the last quarter of the year to start thinking about how can they defray their tax payments, right, with, investing their SRS.
Yes.
So moments when it comes to seasonality, tackling these moments and understanding where these are the peaks of the business are when actually the CACs are extremely healthy, because there's high intent, right? So when you think about periods where people have anxiety or again the sensationalized headlines, that's when people have low intent or even no intent. Right. That's the push and pull to what we do in marketing, the offensive and defensive, and we tend to know. And see the clear signals as we monitor our performance on a daily basis to when pullbacks happen, and then obviously the flip side is to when people are really invested, and when CAC comes down significantly, we put our pedal to the metal.
Seasonality, I think, is something that marketers don't think enough about. So I'm glad that you brought that up. I know, and I want to hear your answer on this, but I know with Analytic partners, when there's like singles or Black Friday, which is a different category, but for a lot of our clients that we recommend that they actually make sure that they advertise in the lead up to make sure that the brand is there top of mind and get that mental capability. Is that something that you do the same when you're looking at these peaks for you? Do you start, or do you just start really close to the time? There's bonus time, there's, end of year, or do you go, okay, that's where it is now, bring it back a good 8 weeks because we know that actually will help us get a higher ROI?
Yeah, that's a great question. And I came from e-commerce. I was with Lazada.
That's right. Yeah, you did.
A lot of what we call these tactics is called teasing.
Yep.
So, before Black Friday, there will be a 10 to 14 day window where we flush you with all the deals and vouchers and the different brand discounts to attract you. I think similarly in this space, right, understanding the seasonality well is also understanding that it's the same season of investing for everyone else. Right. If you think about the traditional banks, our other peers, people are searching at the same time.
Yep.
So that pre-teasing period, or that period where we think that it's important for you to take notice of our brand first, build a little bit about the brand searches and volume.
Yep.
Then use that as a consideration funnel and to be able to be top of mind when the actual activation happens. That really helps in conversion. And true enough, and that's what you allude to. That's something that we do as well.
That's great. I love it when you give real life versions of that, because I don't think marketers hear that enough. I think it's partly because we're busy. So a lot of the times we know it there, and then we know we should do it, and it's on our list, and then it's sort of, gets further down the list, and then we go, oh my goodness, it's Singles Day. We got to put it out, and we should have put it out earlier. And it's one of those things I think is hard because of time, which is a whole other thing. But coming from, and like you said, coming from e-commerce, and obviously with Endowus being from the startup, you have that great mindset from investing, and your latest campaign, Invest with Clarity. It tackles the emotional side, and we have at Analytic Partners, we believe that creativity really drives a strong ROI, and emotion is part of that. And it is very emotional rather than your product pushing. So what have you learnt about investors that led you to that idea? Why did you start to go, okay, yes, there's the product, but actually I need more of a halo of my brand, and the positioning has to be emotional? What led you to that?
Well, many things actually. I think a lot of it was to do with the climate of uncertainty that the investors are facing today.
We are.
Yeah. So if you think about the last few years, it has been nothing short of interesting. I would use
that's a great word. Interesting.
Yeah, and a lot of where investment platforms come in is to actually bank on that uncertainty and that volatility to trigger you to do something.
Yep.
Right. And more often than not, it's trying to drive you into an area of fear, in trying to be FOMO about a certain opportunity that you've missed. Right. But I think what is more important for us is to be able to invest and to be able to see the world with clarity. Right. And a lot of the studies that we do around people's understanding of their investing relationship with an advisor, for instance, which most Singaporean investors are very familiar with. They grew up with a financial advisor, they speak to the person, and a lot of times they are unaware of the fees that they're paying. More often than not, or I would like to say sometimes maybe they are paying more than they should. Right. So in that there's some misalignment in the incentives for some of these advisors. And when we do focus groups as well, and we ask them, hey, what's that one thing that's missing for you when it comes to investing a product? Yeah. They talk about education. They talk about alignment. They talk about incentives that they are unsure of. That their representatives are paying, being paid. Right. Yeah. So in this, we formulated this tagline: invest with clarity. Right. Because the clarity comes from understanding how your advisor is being remunerated, understanding the investment solutions, right? And understanding the entire world that we are living in, right? And how, a tweet, can affect investing or not, right?
Yeah.
Or a macro event,
Some tweets
like a
can.
conflict. Yeah, some tweets. A
From
lot of
certain
tweets.
people.
Yeah. So there it is, right? And that
Okay.
statement actually resonated with a lot of our focus group members, and we actually positioned a few of these options. And I said, hey, what's important for you today as you put your first dollar forward, towards your retirement, towards your kids' education.
Yep.
And they said being able to invest with clarity and to trust, to be able to trust the platform.
The CMO Office is brought to you by Analytic Partners, the global leader in marketing mix modeling and commercial analytics, which turns data into expertise to help marketers make an impact in the C-suite. What kind of impact? Last year, every dollar spent on Analytic Partners, we returned $70 in incremental revenue. Find out more at analyticpartners.com.
Okay.
Right.
And so did the focus groups become before or after you sort of had that positioning, or did you use them both times? And do you frequently do this, or this was like, okay, we need to come up with a positioning, we're going to do the research? Share with us, like, was it a one-off, or this is embedded into what you do in the last 6 years?
So there are a few things that we do. So one is we do a brand measurement, right? So with the brand measurement, you actually cover quite a wide realm of user preferences,
Yep.
right? From using the app, from their affinity with the products, to so on and so forth, right? To meaningfulness of the brand. Do I relate to it? How do I feel for the brand, right? And I think in more recent years is when we are using focus groups to double down on some of these assumptions, right? And zoom into areas that we think might be green spaces for us to acquire, right? And I mean, every financial service platform or FI, right? Trust is non-negotiable.
Trust, yeah.
Yeah. So if everyone goes out and says, "Hey, trust me,"
Yes.
chances are you would not say, I shouldn't trust you, right? It's almost like if you repeat something well enough and often enough, people will believe you.
That is true. That is what we do as marketing. That's why consistency is key.
Yeah, consistency is key, exactly. So, but what punched through was clarity, right? And I think a lot of where we've tested this with our focus group was that, hey, this is that one thing that reminds me why I should be setting up a recurring payment, on a platform like yours, or to be reading a piece of literature that you guys produce, and so on and so forth, or making a new investment with a platform that, gives me that assurance that they're doing the right thing.
Yeah, I mean, especially because, when we think about financial and we think about trust, typically you would trust a larger, more established financial institution than someone that's new and fintech and online, right? So I think that's really good. What I find really interesting about this campaign is that it deliberately sort of slows down that conversation, and it's about, why is restraint such a powerful idea? Because, you're talking about clarity and taking the time, and we talked about this a little bit more in depth with our call, that you understand the peaks and troughs of where your seasonality is, but investment and understanding it and the clarity of it is something that should be constant. And so you really did slow down that conversation, and you've had the restraint to be saying, like, it's clarity, stick with us, will be with us. It's a different idea for your category. And, how's that landed? And how did it land with the leadership team when you pushed this through?
I think it's landed really well, and also not because I had to sell it in, and it's something that we all stood by since the inception of the brand.
Okay.
And I think maybe unknown to most, we started at the cusp of the circuit breaker. I basically joined 3 months before everything went, into the what we call, was it the shutdown or the, I can't remember. Lockdown, yes, the lockdown. Yeah, so immediately people would basically lose access to their financial advisors. They can't go into bank branches. The physicality of having someone next to you just, was removed, right? And that's when we stepped up and we said, hey, we can do this at scale, right? We are a tech company and this is what we do well, right? We have a bench of investment experts that can help you think about, what are your options now that, the market seems a little uncertain. What are your options now that you have a lot of savings because you can't go anywhere, right? You can't dine anywhere, you can't fly anywhere. So it was a prime time for us to actually help people with education. And we have followed through with that on a very consistent basis because we believe that education is power, right? And that's that clarity piece that is, again, the thread that, that goes through everything that we do. We want to help people invest better. And what does that mean for them eventually? That they will have a great retirement.
I hope to have a good retirement too. Maybe I need to look at Endowus. Okay, I'm going to shift from what we've been talking about brand, and that's great. We talked a lot about brand. And I can definitely see that there is a lot of investment and thought that goes in there for Endowus, which is wonderful. At Analytic Partners, we always say that it should be a minimum 30% on brand, but ideally 50 plus, depending on your category. So I can see a lot of your time and effort and money goes into brand. I do want to shift the conversation just a little bit, for a bit more into the paid growth, because when we talked, you deliberately said that you were reducing the dependency on paid channels, so moving more to own channels. So what's driving that? Is it because you're not seeing the numbers you want to see in the performance? Is it because the strategy's changed and they're not supporting it? Or what is it?
Well, there's a bit of both, actually. If you think about where we are going now with GEO, right? And you think about the concept of zero clicks. And that's where a lot of marketers are actually shifting their priorities towards. When SEO was a thing and maybe some 10, 15 years ago, people were like creating articles and trying to think about how to staff their keyword. How to staff their website with the keywords that can, help them rank on the first page, right?
Yeah.
GEO visibility, as well as, in general GEO, is where we think the next realm of exploration is when it comes to brand. Right. If you think about how people search today, they ask questions or prompts.
They do, yes.
Yeah, and on Google, which easily most of us use today, Google Chrome.
Yep.
I don't know if you guys noticed, but they have made the first frame after you search that you need to deliberately swipe it off as opposed to a scroll previously. Right. So there is a fixation in how your brands will show up, and you should be fixated on how your brands will show up in the first frame or the first fold.
Yep.
And it's not just on reducing the dependency on paid, it's just the way the market is moving today, right? Brands are impression first. And if you think about your brand being able to show on that first fold, it is a massive win, right? If you ask a question that qualifies your brand to be in the first fold and you show up and there is a citation there, it is a brand win. Right, and the best part of it is, for now, it's not on a paid basis. Before, the
Wait
engines,
Wait for it.
It's very soon. I'm sure it's around the corner. Yeah, as these companies get listed, they will have to find very, very, very many ways to monetize it. But this is where we are, right? The free paid part is really, again, about orchestration, right? If you think about the nuances of the business when it's stressful and people are uncertain, they ask a lot of questions online.
Yep.
How should I invest? Should I buy the dip? What is the best platform for me to think about retirement? And you want to be there, right? But you cannot pay and attend to the millions of keywords that are out there. So what do we do? So we look at the areas that we resonate from a product perspective, right, and as well as then obviously try and be able to answer for some of these questions, so that paid free orchestration is ongoing. It's a very important piece for us marketers, and for me it's so much more important today because of where we are with almost zero click. If most brand marketers look at how people are engaging them on their platform today, you'll realize that your clicks would have dropped significantly across the board.
Yep.
Yeah.
So if I'm a CMO listening to this, basically, and I'm just going to say GEO because it was AEO because as marketers we can't figure out names, but they're talking about generative AI, like you said, searches, just in case anyone's been hiding under a rock. But so if I'm a CMO listening to this, we're basically saying you're not moving away from paid channels as per se, but the need to have more quality content that answers questions in this new AI era is becoming more and more important, so that sort of prioritizes up your list of where your budget goes.
Yep.
Yeah.
You summarized it really well. I went on and
No,
that was a
that's
great
good.
summary.
That's my job. But I do want to dive into that just a little bit more, because I know you've actually dived quite deep into this and actually fully implementing this for Endowus, which I think is great. And a lot of marketers are still trying to get their head around what to do. And definitely from us at Analytic Partners, one of the things that we look at, we hear from a lot of marketers that they are a little bit scared of zero click because it means that they'll have less clicks show up on their dashboards because they're using attribution rather than a measurement program, and that will affect their budget. We normally tell them, well, actually, it's a good thing because the low intent clicks that you were getting that were from bots or people that accidentally clicked on it because they searched it or whatever, you don't get them anymore, but you do get the high intent ones still coming through. And also, again, as I think we've talked about before, is that channel synergy. I might see it on an AI answer and I might not click on it, but I should correlate that with my traffic and branded search.
Yeah.
Does it go up? Because I might go back later. What do you see about low intent, high intent, and the zero click thing, and your point of view on what other marketers are worried about? Because I know you've got a lot of measurement in place and you're quite deep into this. So I'm sure they'd love to hear a little bit more of what's happening on your side.
Yeah, I think, honestly speaking, we are still at our infancy stage in exploring GEO. And the complementary part to that is really looking at how people are changing the way they interact with our ads, right? So like you said, when you think about Google search today, it's likely that anyone that is coming into the brand today would have the highest intent than anybody would have 5 years ago, because this was before the effect, right? And that is, by virtue of simply what Chrome does, right? The algorithm. Right, and it's true, because if you look at impression versus click now, all marketers are scrambling to say, hey, now I want to lock in an impression first.
Yeah.
So what does that mean for me, right? Do I pay for it? Do I improve my GEO tactics? And so on and so forth. But the mix around trying to think about what a brand should do or a brand should deliver in terms of its goods and services is also not limited to search alone, right? And that's, as you have referenced, thinking about the display campaigns that you do, the thought leadership, right? The press releases that you write, the events and everything else around it, that halo effect of scoring the brand to make it effective in the minds of the individual or the client or the customer that you are trying to attract, is again very unique to the business.
It is, isn't it?
So I think, long story short, looking at the integration of the new, not so new anymore, GEO priorities that any brand marketers is going into today, is understanding the objective. Right, and a lot of brands actually do not need to acquire clients on a regular basis.
That's true.
Right, so when you think about brand activity, does that translate into just having a speaking spot at a very high profile event versus joining a physical convention versus trying to acquire a client via a news portal? So that conversation is very different.
You're absolutely right there. And GEO, so the implication that I loved that you said is that now marketers are going to be looking for the impression rather than the click, because before we were looking for the click. So I think that's great. But you reminded everybody again, zoom out, understand what the objective of it is. Do you need to have the click? Is it about brand? What other signals are there that are going to help you correlate what's happening there? So I think that's really good. We're going to switch up gears now. I'm going to talk a little bit about leadership, because over the span of your career, you've had some very high-profile roles, and you rub elbows with the CEOs, CMOs, and CFOs all the time. So one thing that struck me in one of our earlier conversations was how much responsibility marketing carries for the revenue in your current role. So how do you work so closely with the leadership, and how do you set those targets? Because when we talk, you're quite calm about it. You're like, yeah, this is what I've got to achieve. Got my budget. It's all good. Other marketers I talk to, they go, got to go talk to the CFO. Got to get that budget out. Like, they're a lot more high stress. But yours pretty chilled when we talked about it.
Yeah. I think I have some high pressure moments, especially when I don't deliver on what I sell.
Okay.
But I think it's about having a plan, right? So, and going back to the discussion on unit economics, and that is the baseline to how we think about growing, the next cohort for life cycle management, right? That is the baseline for thinking about overall AUM growth, for the clients that come onto the platform. In that, being able to draft a very comprehensive plan, again, based on the 6 years that we have been in the industry and, the peaks and troughs that we see, all these projections are based on actual numbers that we have actually in the last few years very accurately been able to pinpoint and, almost nail, directly plus minus 5%.
That's okay. Plus minus 5%, I think finance is fine with. Are those targets top down or bottom up?
So there are two ways that we do this.
Okay.
Right. The bottom up is from what we see with history.
Okay.
Right. That's the evidence.
Yep.
Right. That's how we've spent. That's what the unit economics look like. And then we have a top down. So that's the stretch. Right. And I think that's the part where it's interesting for our business because again for financial services or for wealth management, a lot of what we can't control is the macro environment. Right. But just drawing reference to e-commerce, when I was in Lazada, you can sell a shampoo to anyone any day, right?
Yes.
Someone needs a shampoo, someone needs a glass for water, and so on and so forth, right? But for wealth, people will just hold on to every cent that they have until they feel that they're comfortable to leave it. Right. So again, with that knowledge and then how we do this push and pull, we are able to tide through the toughest periods. So this type of so-called management of budget has helped us really, really efficiently maintain the unit economics that we desire.
Okay, and how do you factor in those external non-marketing factors? Like you said, I mean, it's been an interesting couple of years. It's a very interesting moment at the moment. And, everything else from inflation to other things that affect. How do you factor them in when you're trying to build these plans?
Yeah, so I think that's the part where we spend a lot of time on education. So content marketing and SEO and GEO is the part that drives that engine. So when markets are rosy and people are ready to put their money in, we do a lot of paid, we acquire on a broader scale. When people are apprehensive, we educate them on the need to be consistent with your investing, right? And that's free, right?
Yep.
We have content teams internally that look at different asset classes that are represented, different markets and sectors and so on and so forth. And we draft commentaries. We help people alleviate their fears, right?
Yep.
So that part of the funnel, while slower, builds on trust.
Yep.
Because, it's not that day where you are trying to shove a product into my hand. You're trying to tell me, hey, if I'm consistent, if I don't try and time the lowest of lows, I can actually do better than the average person on the street.
I think that's important for finance to do that as well. And what about internally when you're building your budgets? Do you take into consideration when you're forecasting your numbers, if you know ahead of time inflation is going to go up or this is going to happen? Does that sort of come in when you're doing the numbers, and how do you sort of bring that in as a marketer? So when you have those discussions with the CFO, you can say, okay, this is what I'll deliver on marketing based on the money you're going to put in, but also based on the factors that I don't control outside of marketing. Because you can't control if, inflation goes up.
Yeah. I mean, so we react very proactively,
Okay.
Right. So when we look at pullbacks when it comes to acquisition numbers, when we look at CACs going up above normal levels, we act on it.
Okay.
So there's never a need to involve anyone else that, hey, we are pulling back because the market's not looking rosy and so on and so forth. It is, we have already built this flow or this trust that, we know what we are doing with the expenses or the budget that is being put in our hands. But of course, we'll tell everyone, hey, please expect a slowdown in the next few weeks. The markets are a little sloppy, so people are not really investing. And these are the channels that we have pulled back on, right? And when it's better, they will say, hey, we are going to probably spend ahead of, our run rate.
Yep.
Now we are gonna expect to increase this amount by X%, because we think it's a great time, right? And then there's nothing much to sign off on because it's kind of my name on the line and my teams and the confidence will show, right? And we just know the levers to it.
Well, that's what you said. It's the confidence, it's the levers to pull. And it's, I think, even some of the language that you've just said then, the run rate and things like that, and I'm going to move ahead my run rate and stuff. That's what a CFO understands rather than a marketer just saying, I want to increase my budget, right? So I think you've got the language down pat. Wonderful. All right, so I'm almost done of grilling you today. But finally, and I know you haven't been well today, but finally, after 6 years of helping Endowus build from the ground up, what's the biggest lesson about marketing effectiveness that you've learned that other CMOs should remember? So it could be, what you do differently, how you underestimated things, or whatever it is. But how did you achieve that marketing effectiveness? What are you most proud of, and what should other CMOs be aware of, could try out?
Yeah, this is a very good question. It's almost one that is tied to my career so far. Right. So I have had the fortune of changing sectors quite regularly, whether it's good or not. It depends on your interpretation. So
I personally think it's a good thing to look from the outside in on a new industry. But yes, I agree. Not everybody agrees with us, but yes.
Yeah. So for me, it's being passionate about the product, right, that you are trying to market as a marketer. And I went into this business not having an ounce of knowledge in investing. And my founders embraced me with that understanding that I'm probably hopeless when it comes to trying to sell to someone, a portfolio on the streets. And therein lies the area of growth personally for me, right? Where to be able to do something well is to be able to culturally adapt to change.
Yep.
Right. And that's where, in learning personally, I never thought that the way people invested, had that type of a trend, right? Like, we think about it very simplistically, like, oh yeah, people have year-end resolutions and, they start thinking of slimming down, going to the gym more. But one of it is, being able to invest better, right? So we learned a lot along the way. We learned about the Ukraine-Russian war and how that affected mood. We learned about, the geopolitical crisis in the Middle East and how that affects mood and oil prices and so on and so forth. So this whole evolution of my personal experience in this role, it's really based on being able to adapt to change and to quickly think and rally the people that can help you, work through this change, right? So marketing is not a unit by itself. We need to go to the investment office and say, hey, guys, we need to talk about, oil prices. Can I get help to write something, right? And the client team will be like, hey, we need help, because clients are unaware of how they want to, invest as interest rates are, falling, for instance, then can marketing think about literature that we can help push into our database and so on and so forth. So I think that part, and especially important for us as a company that is 6 years old, it's where the synergy happens and has helped us grow tremendously, right? That engine of being able to help one another and to look into the areas of their expertise and freely be able to offer that and accept that, and then come up with a plan to help, our investors do better.
Yeah, I think that's great. I think if I'm a CMO listening here, I think you're saying adaptability is one of the key strengths that you've brought from job to job. and collaboration, I think, is what I'm hearing as well, because you're not in your own bubble being marketing. You have to speak the language, the business language. You need to collaborate freely. You need to get advice. You need to work together. And it's about that adaptability that makes everything sort of give you success, because like you said, you've jumped from industry to industry, which is not a small feat, but you've had success as you've gone on, which is great. I have one more question. After going through this 6 years, how is your financial advising? Is it good? Could I ask you to financial advise?
Well, I would say the right answer to that is no. I cannot give you financial advice because I'm not an MAS licensed advisor. But I can hook you up with someone that can give you the best advice that you think.
But do you
need.
think your education has like tenfold, 100-fold because now that's what you've done?
I think it has tenfold.
Yeah.
And I think I've been so exposed to the world of investing and finance that I'm a lot more careful with my money.
Amazing.
It's a good and bad thing.
Yeah.
So obviously, but this has really helped me tremendously in my personal life. If not career. So
yeah, I mean, I love that as a marketer because I do too. I think that at Analytic Partners now I know so much more. I knew a lot about measurement. Now I know even more. So I agree with you. Like, it's amazing what we get to learn as marketers, which is wonderful. Well, thank you so much for your time today, Jason. It was really great to talk to you, and what a great success we had talking about Endowus. I wish you all the best for the next 6 years and further than that, and I'll be keeping an eye on what those next campaigns might be, and maybe I'll go check out the platform. I feel like I might need to.
Not maybe, you should.
I should. All right. Thank you so much.
Thank you so much, Nikki.
If you enjoyed our episode of the CMO Office Podcast, don't forget to like and subscribe across all our social media channels, and also check out the-cmo-office.com to receive our free weekly newsletter on how to be a more effective marketer. Thanks for listening.